All right, let's dive right into this week's incredibly complex market environment. We're unpacking the latest Wise Money report from August 2026. And honestly, the goal today is just to find some clear waypoints through all the noise. It's been an absolute whirlwind of a week globally, and you know as well as I do that understanding the underlying data is literally the only way we can separate the temporary market turbulence from actual actionable trends. So let's get to it.
Look, investors are intensely looking for a steady hand right now. And for good reason. Global crosscurrents are just swirling, making it incredibly tricky to know exactly where to position your portfolio. I mean, you've got these completely contrasting economic signals firing off from every major economy, which means those old, reliable strategies, yeah, they're really being put to the test.
So, here's our roadmap for this explainer. We'll kick things off with a global market overview, hit some domestic equities and news, then dig into our top fundamental stock picks, check out some technical breakouts, and finally wrap up with a commodities watch. Starting right off with Section 1, our global market overview, looking at the major headwinds and tailwinds. Right now, global markets are performing this really delicate balancing act. And the absolute most crucial data point to keep in mind is this number right here, 3.7%. That's the US July PCE inflation rate, which, as you know, is the Fed's preferred inflation gauge. Well, it came in well above their 2% target. What this tells the market is, frankly, pretty sobering. Monetary policy, meaning higher interest rates, might stay restrictive for much longer than any of us initially hoped. And that's exactly what's pushing Treasury yields higher and putting a hard ceiling on certain asset classes. Meanwhile, if we pivot over to Japan, we're looking at a completely different dynamic with the number 2%. Underlying inflation over there is creeping right up to the Bank of Japan's 2% target, and BOJ officials are definitely stressing the need for timely rate hikes. This completely strengthens expectations for further policy normalization in Japan, which, you guessed it, adds yet another layer of volatility to global currency and equity markets. Navigating this macro environment means really wrapping our heads around these competing forces. On the headwind side, like we just talked about, you've got sticky US inflation, elevated yields, and those ever-present geopolitical risks. But battling against all of that, you have some massive tailwinds. We're talking relentless AI optimism, fueled by massive revenue outlooks from tech giants like Nvidia, plus some surprisingly encouraging economic signals out of Europe. Germany actually just revised its second quarter GDP growth up to 0.3%. It's a massive tug of war right now, and it's keeping global indices highly reactive. Moving on to Section 2, let's talk about domestic equities and trends in what is largely a range-bound market. So, the Indian market is largely mirroring that global caution we just talked about, remaining pretty stubbornly range-bound and, understandably, weighed down by geopolitical concerns. But here's the real takeaway for you. Despite that broader market hesitation, businesses aren't just standing still. No way. We're actually seeing some really aggressive strategic corporate moves. Take Tata Consultancy Services. They're making a massive play, picking up a 100% stake in MHP, a Porsche subsidiary, for an enterprise value of 320 million euros. Over in the construction space, NBCC secured a solid 121.74 crore rupee order for new school buildings. And Varun Beverages, they're expanding their global footprint by setting up a joint venture in Tunisia. So, while the broader market might be taking a breather, corporate expansion definitely is not. All right, let's dive into Section 3, our top fundamental stock picks, specifically looking at Usha Martin and Home First. Drilling down into the micro details here, the report highlighted two fundamental stock picks that are structurally positioned to thrive regardless of the macro weather. First up is Usha Martin. What's super fascinating here is the company's totally deliberate evolution. They're actually transitioning away from simple volume-led industrial growth and pivoting hard toward value-led specialty manufacturing. They're dialing in on high-margin products, think things like elevator ropes and bespoke end fitments. And because of this pivot, management expects to sustain a massive 20% plus EBITDA margin. Guys, that's a structural change in how this business generates cash. And naturally, that fundamental strength translates directly into the report's price targets. Over an 8 to 10-month timeframe, the report is projecting some strong upside for Usha Martin, setting a target of 564 against a current market price of roughly 491, and that's largely driven by their specialized capacity expansion. Our second pick is Home First Finance, coming in with a target of 1409 against a current price near 1193. So let's unpack exactly why they're commanding that premium.
What is truly incredible about Home First Finance is the technological engine running the whole show. They aren't just your standard traditional lender, they're a tech-driven affordable housing finance company. They are maintaining a 25% asset under management growth guidance and delivering a phenomenal 4.2% return on assets. How are they pulling that off? Well, it's all about their digital infrastructure, specifically their AI platform Q, which processes over 100 data points per applicant. That keeps their underwriting incredibly tight and their gross non-performing assets remarkably stable at just 1.8%. Pretty impressive stuff. Let's shift gears a bit for Section 4, Technical Breakouts and Strategies, where we'll be charting the path forward. Looking at some immediate technical setups. First up, we have SAIL, the Steel Authority of India. Right now, the trend is signaling a really powerful structural reversal. Following a multi-week consolidation phase where buyers just kept defending the price, SAIL has cleanly broken out of a classic rounding bottom pattern. It's surged right past key horizontal resistance in that 188 to 190 zone, which sets up a highly bullish trajectory with an expected upside target in the 215 to 220 range. Our second technical setup is Engineers India. The stock has been consistently forming these higher lows, creating a classic ascending triangle pattern that's pressing right up against horizontal resistance at the 255 to 260 zone. Now, the strategy here is conditional, okay? A decisive close above 260 is what we need to confirm the bullish breakout. And if we get that, it opens the door straight toward those 290 to 295 levels. Finally, bringing us to Section 5, our Commodities and Energy Watch, looking at current ranges and shifts. You know, if you really want to understand global risk appetite, you've got to look at raw materials. Those high U.S. Treasury yields and the stronger dollar we mentioned earlier, yeah, they have real consequences. They've actually snapped a 3-week winning streak for precious metals. Both gold and silver saw some pretty heavy profit booking and declines of over 2.5% for the week. Because of this pressure, the report is definitely advising caution here, placing gold and silver into very specific, bounded trading ranges, while the market essentially sits on its hands waiting for more U.S. labor data to dictate the next major trend. Meanwhile, the energy complex is quite literally splitting in two right now. Crude oil dropped by over 4.5% as geopolitical supply fears eased up a bit. Reports are actually indicating that oil exports from the Persian Gulf have recovered to about 2/3 of their pre-war levels. But flip the coin, and natural gas surged nearly 6%. Why? Simply put, Mother Nature. A massive heat wave is driving up cooling demand across the U.S., and that's combined with a smaller-than-expected storage injection. It's just a perfect example of how micro-fundamentals can drive distinct assets in totally opposite directions, even within the exact same sector. All right, so we've covered a ton of ground today. You are now fully armed with the macro context, that crazy tug of war between sticky inflation and AI optimism, along with some highly specific micro targets, from Usha Martin's major margin expansion to Sal's technical breakout. So the ultimate question I'll leave you with is this. With global volatility testing the waters and shifting yields completely rewriting the roles, how will you navigate the currents of the market in the days ahead? Thank you so much for joining me for this explainer of the Wise Money Briefing. And as always, stay focused out there.